This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, April 3rd, 2015. Euro dollar. So at this point, it's unclear whether the euro wants to continue its correction off that recent 12-year low at 104.62, or if the euro is in the process of putting in a lower top at 110.53 ahead of a fresh downside extension. So for now, we're going to need to see a break back below the recent low at 107.13 or above 110.53 for clear directional bias. If the market can break above 110.53, this could open a deeper correction up towards the 113 to 114 area, while back below 107.13 would open the door for an immediate retest and break of that 104.62 12-year low. Sterling dollar. So cable has been recently consolidating off of those lows that we saw at 46.35, and the market is now trying to put in a fresh lower top at 51.65 ahead of the next major downside extension below 46.35. At this point, we're going to need to see a break on either end for clearer directional insight. If we see a break below 146.35, this will open the door for a move down towards the 140 area, while a push back above 51.65 would delay the immediate bearish outlook and expose a deeper correction to the top side towards 155.50, but really only back above that high that we saw back on the 26th of February at 155.52 would compromise the bearish outlook. Dollar yen. So dollar yen has been consolidating in recent trade, with the market not doing much except for recently pushing just to a fresh 7-year high above that previous high from December at 121.85 and towards 122.03 before stalling out. At this point, any setback should continue to be very well supported into the 118 area, with the broader structure still highly constructive. An eventual break above 122.03 is seen towards the 125 to 130 area further up, and really only back below 115.55 would compromise the bullish outlook. Euro Swiss. So Euro Swiss has come back under a little pressure in recent trade, with the market breaking down below key support at 104, but unable to close below 104. At this point, next key support comes in at 103.55, and only really a close below 104 would open the door for fresh downside. But even with the fresh downside, the market is still in the process of recovering off those critical historic lows that we saw several weeks back, with a recovery intact and seen back towards those recent highs at 108.15 and towards 110, 112 further up. Really only a break back below parity would give reason for concern and delay or negate the recovery outlook. Aussie dollar. So Aussie dollar has been a relative underperformer in recent trade. The market is locked within a broader underlying downtrend, breaking to fresh 6-year lows in recent trade below 75.60 down towards 75.33 thus far. However, the inability to close below 75.60 does keep the pressure does delay the immediate downside pressure and suggests that the market could be poised for a bit of a bounce. Really only a close below 75.60 would open the door for fresh downside towards the 70 barrier, but inability to close below 75.60 will keep the market locked within this broader consolidation for the time being. At this point, key resistance comes in by short-term resistance comes in by 76.64, and a break back above that level will open a more significant correction within this downtrend. Ultimately, only back above 79.38, however, would compromise the bearish outlook or delay the bearish outlook. Dollar CAD. So dollar CAD has been comfortable trading within a broader range over the past several weeks between 123.50 and 128. We did see a brief break above 128 to fresh 5-year highs on the 18th of March at 128.35. But again, the market is now pulled back into the mid-range and is comfortable trading in this area for the time being. Overall, the bullish outlook does remain intact, and the structure is highly constructive in favor of an eventual break of this consolidation to the upside beyond 128.35 and towards the 2009 peak at 130.65 further up. At this point, only a break below 123.50 would delay but not negate the bullish outlook. And Kiwi dollar. So Kiwi has been chopping around in recent trade, though the market is locked within a broader, well-defined downtrend. Any rally should continue to be very well capped above 76 and towards 77, while a break back below the recent 71.76 multi-year low will open the door for fresh downside towards the next key major psychological barriers at 65. Really only back above 78.90 at this point would compromise the bearish outlook. SPX 500. The S&P 500 has been showing signs of a top in recent trade, with the market putting in a record high back in February at 2120, but unable to overtake that high, putting in now some lower tops on a short-term basis and threatening a break below critical support, which comes in at 2040. A break and close below 2040 will open the door for fresh downside and strengthen the topish outlook for this market, with a move seen back towards 2000 and below. Gold. So gold has done a good job of recovering over the past several days, installing out ahead of that critical 2014 base at 1131, and the market is now trying to continue this upside price action to confirm a longer-term base down at 1131. A break above 1223, however, will be required to strengthen this outlook and open the door for more significant gains over the medium term. Inability to take out 1223 will keep the more immediate pressure on the downside and possibility still for a retest of that 2014 1131 low.